Nasdaq 100 increase buying. Yes, it's 3:47 p.m. Yes, it's 123, 2012. And what are we looking at? We're looking at on the Nasdaq 100 on the call side of the market. We've seen huge buying up here. 7,100 is the open interest, but the daily volumes that we're looking at here in the strike price of 2,500, it was 1,600 of those, 2,300 and some odd. Look at here, look at the 2025 call, 2,300. That's this strike price right here. Okay, so there was increased daily volume activity here. Okay. Not only that, if you go to the $2,600 call for February, people were buying 2,200 of those contracts with a 4,830 open interest. How about that? However, it's not like back when you were down at the lows in 12 December 11 calendar when you could buy up and out of the money as we had featured the 2400, the 2450, the 2475, and the 2500. That was before this rally on up starting calendar 2012 when they were really cheap. That was up and out of the money and available. And right now we're seeing the same kind of behavior on a daily volume level is where that daily volume activity is increasing. Now, having said that, on this daily volume, you can see where the 2275 put was being purchased big. But look at here. Somebody was buying well below the market where you got 20,000 open interest right here at the 2200. That's right. So MMT, what I'm trying to show you here is where the daily volume at 2225. That's pretty good volume for, but look at the open interest here. 20,000, 19,000. So what I would like to tell you here is that the open interest columns here and the open interest columns here is that you still have that bull mentality, which is great to have. However, when you start seeing an increase in daily volatility and people buying more up toward the high, all of these calls are totally inflated and ready to come down. And the thing about it is, hey, they're going to get buried because of it. And the thing about it is, MMTs, what you're taught is how to get at a certain diminishing price intraday highs, as you've been taught, is how to look at where markets make changes in the short term. And what does that mean, MMTs? It means only one thing, that the bull rally has a pullback, as it will. They all do. Apple tomorrow may give it a helping hand. However, take a look at the volume count. We're going to go through them one by one. Nasdaq 100, what's important? Here are the prices that these people are paying. You know, I mean, some of these people today that bought 1,600 contracts at $13.50, this is going to be the last print. And that was a $2,500 call up and out of the money. That's pretty expensive. And I can show you just how expensive it is, MMT. Everything that you're taught to know this. You're taught to take that $2,500 call and you're taught to go over here. I just want to look at that $2,500 call. It reached its inflated peak, but look at it. It's coming down in value. Yes, it is. Is it one that is viable on pullbacks? Sure. I want to point it out, though, that these lows over here are going to get broke. That means that there's still a lot of downside risk from this calendar 2012 inflated area. Here's what happens when they get inflated. They go down. Watch my pointer. Here, see that? Now, you got to know when to be a seller at the high. So, they're pulling it back. That's why you've seen increased volume here today. And you did. So the volume was higher than your normal activity on a bulk basis. And people were buying the dip. And it's a $2,500 call. Not only were they buying that one, I told you that they were buying this one too. The 2625 call. which is a little ridiculous because this would only be a premium trade. They do have value up here at $1.50, but you don't wouldn't want to pay any more than 10 cents or a nickel. One of the other areas I found interesting was this 25.25 call. And it too, unlike the other one, $25 difference up here inflated. Now they pull back toward the $6 handle. So you can see where some of those up and out of the money calls are losing value. Now, if you take a look at the $2,450 call, once again, it too has value, but it's a little bit too inflated. They need to come down. That's that 2450 call, one that we would look at buying one day. Here, on pullbacks, as they get marked down, of course. So as these calls are inflated, they just can't stay up here. This is 2012. They're inflated. They have to come down. They have to come down in here. That's a 2425 call. Now, when you take a look at the same $2,400 call, you see the same thing up here at $70. Hey, I'm sorry. They got to come down. This is a call side that ran too far too fast. So therefore, if you did get involved in them like we were, you'd be selling up at the highs. Look at that. Gap, gap, gap. But now look at them. 70 on the high, 60 on the low. They're getting marked down. Look at that. Now, let's take a look. Hey, let's not forget another important thing. That's going to be this 2375. This call, $91 in the money. Look at that. It started that way, and it's inflated up here. It too has to come down, and will come down. MMT. I guarantee it. Now, if I say that it's going to come down, then that means that the other side of that market, which is going to be right here, here's that 2450 put. That got a bottom up, 2450 put, bottom up. They marked those bids down and then they marked it up. Yes, they did. And you'd be looking at that. It's the first day. Now, having said that, you can also see here the 2425 put. It's been marked down from $90 and it's deflated. It doesn't look like that other chart, does it? That means that these aren't staying down here. They can come down lower, but they are going to work their way back up. There's going to have to be a change in prices between the two. Now MMT, take a look down here where some volume was bought today, and that's on the 2275 put. Let's take a look at it. Oh my goodness. Boy, they really have marked this market down, haven't they? For January, down to 810 from 30. 1, 2, 3, 4, 5 days ago, they were 20. They marked them down, and that's below the market. The reason why we're looking at the imbalances, MNTs, once again, I'm going to conclude the Nasdaq 100. Not only that, I will conclude on how to steal the bid, and that's on an entry. In free market futures, I will price that bid. And I will price that bid where I'll get in front of those other market makers, just kind of like today. And hey, I can give you an example right here on a 2450 put right here. $16. They had a $10 up to 26.40, but it closed at 29.15. But look what happened to it. See? This is what I'm talking about. And it's still down. This is a weekly. But this is the example of getting those lower bids when you are at Nasdaq tops that are starting to get a little weak. That's what makes these worth trading. And once again, it's going to be about stealing that entry. And that goes for all of them starting tomorrow morning.